Today, I want to show you proof the shorts are trapped by showing you a short seller freaking out, telling everyone he's trapped without actually telling everyone he's stuck in his position. I also want to explain how the bank collapse is closer than you might think. So stay tuned and let's make some money. Now, yesterday I showed you Shazad, who is up 81% in his account since last Thursday. And today I want to show you Firefly, who in his first full month of trading is already up $911. I can't remember the amount of money Firefly started with, whether it was $500 or $1,000, but Firefly is up significantly as well. But now I'll dive straight in with the key information. So, starting from the top, I want to explain what FUD has recently been spread around, how that FUD was debunked, and how that FUD was knowingly reposted by a short seller. So, firstly, you may have seen the information going around that apparently Moody's had sounded the alarm on AMC by downgrading their credit rating and slapping AMC with a default. There was a few articles like this one titled AMC Stock Alert. Moody's sounds the debt alarm on AMC, giving AMC a credit rating of B3 or lower, suggesting AMC's debt was classified as junk. But Tony Denaro had already busted this FUD with this tweet, saying another non-due diligent YouTuber has been pushing false information, saying AMC received no downgrade on their credit rating, and the default was a 3-day technicality that's already been removed. Saying for the real facts on AMC, perhaps actually try reading Moody's report. So AMC's debt isn't in default, they just received a 3-day technicality as a result of paying off previous debt that's already been removed from the issuer. But John Hempton tweeted saying, "Dear apes, Standard & Poor's, the mega rating agency, now rates AMC selective default and believes that it will falsely run out of liquidity." Now again, John Hempton clearly didn't read Moody's report and is just trying to spread this report as FUD. He even followed that up saying that he knows the article is old and tries to combat that by saying the box office is running just as bad. Which again, to dispel that FUD, actually the box office is doing better than it has done the last few years. In 2020, the box office brought in $2.1 billion. That increased in 2021 to $4.4 billion, increased again in 2022 to $7.3 billion, and last year in 2023, $8.9 billion. Actually, the box office has been increasing by 112%, 64%, and 20% year after year after year. And 2024 is setting up to be another year-on-year increase. And then to really show just how panicked those short sellers like John Hempton really are, he's tweeted by saying that apes will surely run out of money someday. But clearly, John Hempton, being a short seller, forgets that it costs apes nothing to hold. We don't have to pay an interest borrowing fee when holding long shares. Actually, it's the short sellers that have to pay a fee every single day to keep that short position open, and have to pay fees and fines every single day to roll FTDs and incur even more FTDs. And it's also those same shorts that are borrowing other stocks like Nvidia, Meta, and other stocks as well. Meta being one that's up 15% overnight. So again, overnight, now that Meta have just released earnings and the stock has hit a new all-time high, the shorts have just lost another 15% of their cash. And what makes matters even worse is that John Hempton didn't even post the Moody's article from a few days ago about AMC being in default. He's posted an article back from 2021. Sounds like he's desperately trying to do anything he can to try and convince you to sell your shares. Now again, I'm not telling you to buy, hold or sell, I'm just simply telling you the facts that I see out there, and the fact of today is that apparently a known short seller thinks that apes will soon run out of money. Unlikely. Also guys, today is the start of the month, so it's the best time to join the Millionaire Mindset trading group. Today we took a few trades on CNXA and MINM, where Ross locked in 28% gains. The total move for today was nearly 50%. On top of that, both Moses and Chapin for Life closed out of their BA puts, which we were holding overnight. Moses locked in a 55% gain or $500 in one day, and Chapin for Life locked in 102%, getting a bit of a better entry and a bit of a better exit. So guys, be sure to make the most of February and join the Millionaire Mindset Trading Group using the link in the description below. And remember, there's a 100% guaranteed refund policy if you don't make a singular profitable trade in 30 days. Markets with May even commented saying, "I find this very strange. Why would anyone purposefully spread misinformation and then suggest they're working in the best interest of the truth?" In other words, he knew the article was old on the bonds that no longer exist, but posted it nonetheless without any clarification. As I said, that to me tells me these short sellers are trapped and are desperate to try and do anything they possibly can to get your shares. Now, Bigham's also posted saying that he believes 2024 will be the year of job cuts and a banking crisis. He posted this article that says 2024 is already looking grim, and it's only January. 38% of business leaders surveyed by Resume Builder think layoffs are likely at their companies this year. Not 3.8%, 38% of companies are planning layoffs. As Genevieve tweeted, layoff announcements total 80,000 employees in the United States in January alone. That's 80,000 people laid off in 1 month, which is the most in 10 months and a 136% increase from December. And as Bigham's believes, he says this is exactly what apes need for the game to end. Speaking of another bank implementing layoffs and clearly experiencing a crisis, Deutsche Bank is also cutting 3,500 jobs in a $2 billion cost-cutting plan. Again, this is just another major bank on top of other major banks like Wells Fargo and Citigroup who are implementing massive layoffs and massive cost savings plans. Why is that? It's because rates are remaining higher for longer and no rate cut is expected in March nor May either. Which again means banks are going to struggle even longer, they're going to struggle even more, and they're going to need even more bank bailouts. But wait, the bank bailout facility is ending March 2024 in just another month. So where will these banks get this cash, or will they end up more collapsing? Speaking of firms out there collapsing, Boss Blunts has tweeted about the Chinese real estate developer Evergrande and their ordered liquidation. So I said in some of my previous videos, we need to find out how much of this debt is actually recoverable, or how much these overseas banks are going to lose. And that question has now been answered because the appointed liquidators and their analysis found that creditors would see a 3.4% recovery rate, aka 96.6% of the overseas debt is about to be wiped out and valued at zero. aka these overseas banks, institutions and hedge funds are going to have to take 96.6% losses on potentially tens if not hundreds of billions of dollars. And what makes this even worse is that Yahoo is actually reporting that China's Evergrande liquidation is a $1 trillion problem. So not just tens or hundreds of billions, but a $1 trillion issue. But you might say, Tom, how can a company like Evergrande that has around $300 billion of debt be a $1 trillion problem? But remember, there's a lot of external money betting on Evergrande as well, not just the specific debt. Well, so you've got the debt, which is $300 billion, but don't forget on that, you've got insurance insuring that debt or credit default swaps, which is multiple hundreds of billions, if not trillions. And you've also got CDOs of those credit default swaps and bets against the credit default swaps, and it just gets messier and messier. So that's how a potentially small $300 billion worth of debt collapsing turns into a $1 trillion issue. On top of that, this interview also explains that there's a lot of other Chinese property developers like Country Garden that also have a lot of US debt where the Evergrande bankruptcy may spread to. Like with Lehman Brothers and Bear Stearns, many of those losses spread around the entire banking system, with many banks taking on giant losses. So with Evergrande collapsing, it's likely it could also impact many other Chinese property developers, also impacting many more US banks and those loans. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.